everybody. Welcome to another episode of the Bearded Men of Real Estate Show. I'm Ray. Say hi, Dan.
Hi, Dan.
And this is Dan. We're both bearded real estate agents who have a show. So we called it the Bearded Men of Real Estate Show.
Weird, right? I mean, remember when they did the national search and we were the only two bearded realtors at the time?
At the time, now it's become quite popular.
Right.
Attributed mostly to us. Some say Duck Dynasty, but I think attributed mostly to us.
Yeah.
So we are going to blast. We have tons of news today. Lots of headlines, lots of stuff going on in the marketplace, and we want to get your feedback on it. So one, we've both asked on our personal page, what do you think homes are going to do? We're looking for feedback specifically from consumers and also from real estate agents. A lot of real estate agents try to put in we want the right answer, but we really want the feel of consumers because that helps us as real estate agents kind of know what our clients are going to anticipate. So if you haven't voted, you can vote right here on this. Let us know, what do you think home prices are going to do? Do you think they're going to go up, down, or what? If you're a real estate agent, please share this to the page because we really would like some consumers to chime in on this. It's one of the big articles that we're going to talk about in a little bit. And if you are watching us live, we normally do the show about 12 o'clock Central. That's 10 o'clock Pacific, 1 o'clock if you're on the East Coast, which Melissa Mara is, who's checking in. She says, woohoo, which both wearing Be More shirts today, by the way, which is cool. Chrissy's here, so she's checking in. Hey there. Hello. David is in. He said, happy Wednesday. Very happy Wednesday to you, too. And then Paige Lewin says, hi.
Hi.
All right, so those are all real estate professionals, by the way. So if you are a consumer, we'd love to have you chime in too. But thanks for joining the show either way. Dan, before we get into these headlines, because we have a lot we're going to talk about, mortgage rates, we're going to talk about builders. You guys can read the kind of the summary, the description. We're going to talk about Zillow taking over another part of the industry, which that may be news to some, specifically if you're in property rentals. So we got a ton of news to talk about. But before we get into all that stuff, Dan, would you tell people what Be More is actually all about?
You know, I'd love to. Now, when Ray and I met, it was about 3 years ago here on the interwebs. And
I remember that, yeah.
Yes, I hope you do. It wasn't that long ago. It wasn't like it was 1982 or anything. What happened in 1982, Ray?
I don't know. That was a pretty big day. Pretty big day, 1982, if I remember correctly.
Just a quick side note, our own Ray Ellen has recently had a birthday. And in lieu of, no, I'm just kidding. So everyone, right now, we got to do this now. In the comments down below, say happy birthday, Ray.
And also, I will put my Venmo. There it is.
But when we met about 3 years ago, and I had an idea for a show called The Bearded Man of Real Estate because I am, in fact, a bearded man of real estate. And when Ray and I got to talking, he actually had a layout for the show, and it's the same layout we do today. But I noticed something else about him.
The biceps.
He prefers an alto saxophone over a soprano saxophone. Did you guys know that?
I actually did play alto.
Did you? So did I. That's why I made that reference. He had the layout for the show, and he also obviously has a beard. So we Wonder Beard powers activated, and we combine forces. But we also both like to give value up front as agents. So it's about being more as agents, but also being more as humans.
Appreciate all the happy birthday wishes. Melissa Mara chimes in, says happy birthday. I'm not sending you any money though. That's fine, Melissa. Your love is more than enough. Also, you could choose something from my Amazon wish list. Robert says, so we're also getting a couple of speculations, as he says he speculated, a couple of predictions, if you will.
Hold those.
He says, I like the speculated V curve for the real estate market.
Okay, hold, Paige, hold.
You want to hold this? You want to hold it?
Yeah,
I'm going to put it up there anyway, though. Kevin says the market's going to come back strong.
Such a rebel.
If you can read fast, you can read pages. I'm going to come back to hers later.
Second one.
All right, so you ready to get into these headlines?
Absolutely.
Right. Okay, thank you, Chris. I'm getting the birthdays. Thank you so much.
This is the Ray Allen birthday show. Forget predictions. Forget boring real estate stuff. We're just here to wish Ray a happy birthday.
That's right. And hopefully, we've been putting much more attractive thumbnails. Our faces are bigger on it, so hopefully you like them more. But that is to create shareable content. So don't forget to share if you're watching. Please share. I can't put share in the like Facebook will suppress. Facebook will suppress your post if you put please share in your post. So that's why we don't do that. It's not that we don't want your shares, because we do need your shares to make this show what we think it should be. But it's definitely something we would like for you to do.
So you know what a great birthday gift would be, Ray?
What's that, Dan?
Share the show. And for my upcoming birthday in 6 months from now, share the show.
Okay, so I don't have this first one up, so I'm not going to be able to display it for you. But this first report comes to us from CNBC. It says weekly mortgage applications to buy a home make a strong recovery as rates hit a new record low. So rates now are sitting
during current conditions.
Yeah.
Wow. Cool.
During current conditions. So rates are now sitting at 3.43, and that's for non-conforming, blah, 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 blah. So talk to your lender if you want your rate. This is specific to the non-conforming ideal person with 20% down, etc. Anyway, news is picking up on what the bearded men of real estate has been saying for a few weeks now, that buyers are returning to the market. This is evidenced by strong mortgage application numbers that rose last week as refinance demand finally fell after several weeks of surges. While total application volume was down 3.3% for the week, still 218% higher than last year, mind you, mortgage demand from home buyers jumped 12%. While volume was 20% lower than the same week last year, this is still a good sign for the marketplace. Here's a quote from Joel Kahn. He's the Mortgage Bankers Association Associate Vice President of Economic and Industry Forecasting. He says, quote, the 10 largest states by application volume had increases in purchase activity, which is potentially a sign of the start of an upturn in the pandemic-delayed spring home buying season, as coronavirus lockdown restrictions slowly ease in various markets. He goes on to say that California, which Dan has a close relationship with, and Washington continue to show increases in purchase activity, with New York seeing significant gain after decline in 5 of the last 6 weeks. Interesting. I wouldn't anticipate that New York would already start to see a gain.
I wouldn't either, because they're not getting a hold on things as quickly. But when we are in the Be More Contributors group, by the way, if you guys didn't know, Be More, BMORE contributors with an exclamation point. You can go there and see we share our posts there throughout the week, and then so do the contributors. But we've had conversations where certain areas of New York are not that hard hit. So maybe it's because it's a big state, right?
Yeah, that's true. It is a big state. You just hear the horror stories that the media is filling the airwaves with, and you think, well, no one there is buying. Not exactly the case.
Yeah.
Some buyers are tired of waiting and or literally can't wait anymore. Leases are ending, as an example. That's true.
Yeah, I mean, if their plan was to, let your lease expire and then buy, that's still the plan, unless you can get month to month right now. But if you go month to month, they may increase that monthly rental.
David, with a just kidding but not kidding, were those looking employed or unemployed? Good point.
Kidding, not kidding. All right. So we all know who Jim Cramer is, right?
Boom.
Yeah.
Sell.
Sell. He hits lots of buttons and makes lots of noise. We used to actually bring him up.
That was a great impression.
Yeah. We used to bring him up on the show a little bit more, it seems like. But Jim Cramer blasts the small business loan program. And I agree, I think for good reason. CNBC's Jim Cramer criticized banks on Tuesday for approving small business loans to larger companies that were not meant to benefit from the Federal Paycheck Protection Program, the PPP. As a quote, I just want to know who made the bad loans. Somebody did, Cramer said on Squawk on the Street, suggesting the names of the banks who facilitated the loans should be made public. He goes on to say, I think that banks were complicit. I think banks gave loans to very good customers, maybe because they needed to keep them afloat. That makes me want to do the emoji, right? The Triple P, approved by Congress last month as part of the $2.2 trillion coronavirus rescue package, was intended to help small businesses pay workers during the pandemic. But it ran out of its initial $349 billion funding allotment in less than 2 weeks, and public companies like Shake Shack and AutoNation and private entities such as the NBA's Los Angeles Lakers were found to have received loans through the program. If that doesn't upset you, then I don't know what should. Now, I did a little more research. So further research says that Shake Shack returned their $10 million, AutoNation returned their $77 million, and the Lakers did return the $4.6 million. But the Lakers actually applied for the loan and received it, but then decided to return the funds when they learned that the funds were depleted. So my question is, why did they apply at all? Who approved it? And I think this is what Cramer's saying. And maybe if large entities like these didn't apply, the funds wouldn't be depleted, because between those three alone, Ray, that's $90 million in funds.
I don't know that they gave back or said never mind about the money because they were depleted or because of the public outroar that soon ensued. Right. You know, they were getting some emails, right?
Yeah.
But I think if there's one thing we could agree on in the broadcast, whether you're Republican, Democrat, liberal, conservative, libertarian, independent, whatever you are.
I'm still other out of all this.
Right.
Still other.
In order for the Lakers to win a championship, they need some help. So let's get to Christopher. He says, greetings. Thank you. David said they need an app to approve.
Right.
Why and who filled out the application for the loan? Well, I'm sure it was somebody in their front office who's looking at front office staff that's currently furloughed because the $1 billion Lakers decided not to pay them. So I think there's things like that that are going on that they say, well, the government's going to help. So if the government's going to help, then we can take these actions and use the government money.
Yeah.
But what they didn't anticipate is how public that stuff would become and the public outcry over companies that shouldn't taking it.
Yeah. And I read early on the Angels, the Los Angeles Angels, they returned the funds as well. You know, so I read this and then I read about the Lakers returning it. Because technically, I believe their thinking is they have less than 500 employees, right?
They technically didn't do anything wrong by the initial guidelines.
Right.
Correct.
But then the backlash came out. So, Chris Murray's $38 million loan was denied.
Shame. You already have enough money, Chris. We all know.
Ooh. Look at David's comment. So I'm going to go a step further with his comment. So he says, I wonder if Redfin got some. What if
that was their strategy all along?
Well, what if they were too big for the loan? So they laid off some and now they're under that cap, right?
Ooh. Huh, that's interesting. They did lay off 41%, but those were mostly, they only had 7% of their staff that was laid off. I know a lot about Redfin numbers. It's weird. They did lay off 7% of their staff that were salaried. 41% were agents, but I think they salary their agents somehow. I wonder if they're 1099 or. It's a good question.
Chris is on fire today.
Sneaky. Redfin was entitled to $6 million, but another lender said they would fund it for less. Quote unquote, Chris Murray. Very good.
You know why he's on fire? Because his beard's really coming in.
Oh, really? Nice. Oh, well, that's stupid. Robert Sampson said they did bring back a few of the agents in my local area. David says a salaried employee. So those are salaried employees that they furloughed, and the money was for furloughed salaried employees in order to continue to pay them while furloughed. Interesting. That's a good question. I wonder what's going to happen to them. All right, so let's talk about home price gains. They were seriously strong before the shutdown.
Oh,
it's another one of those. We did talk about this a little bit last week.
Yeah.
Oops, I gotta scroll down a little bit here. All right, so home prices were steadily increasing prior to the global pandemic, 4.2% higher. They were 4.2% higher annually for the month, up from 3.9% in January. Let's see. Prices in February were strong, and buyer demand and limited supply and record low mortgage rates. Results I'm missing like small words, and it sounds like I cannot speak. So sorry about that today. Results for the month were broad-based, with gains in every city in our city composite. 17 of the 20 cities saw accelerating prices. Said Craig Lazara. He's the managing director to global head of index investment strategy and S&P Dow Jones indices. He goes on, quote, importantly, today's report covers real estate transactions closed during the month of February and shows no signs of any adverse effects from the government's suppression of economic activity in response to the COVID-19 pandemic. That quote there is pretty interesting just because it shows a perspective of this guy who's let's see, he worked at the S&P now. He's talking about the government suppression of economic activity. He says as much of the U.S. economy was shuttered in March, next month's data may begin to reflect the impact of these policies on housing market.
Yeah.
Now we want to talk about this more. I've got one more article that's going to discuss home prices. We're actually going to talk about prices in the U.S. and what's happening there and what they're kind of predicting there. And then that's really when I want your guys' feedback. This says that most analysts do not anticipate a repeat fallout like the subprime market in home prices.
Right. I mean,
we'll hold our comments for the end.
Okay, sorry.
Chris Murray is sassy and I like it. Andrea might beat him, said Melissa Mara. David said they can ask all they want, don't mean they getting them. I think he's talking about the loans, right?
Yeah.
Redfin and the loans.
Yeah. I do think it's interesting, but I also think it's interesting that home price gains are slaying right now. I don't
That's a reference to the Be More Chops. If you haven't seen it, go look up the Be More Chops. That is about Zillow's iBuyer program slaying the market, which was right before all this happened. So it's pretty funny.
They slay and only lost $101 million.
Zillow's home buying program needed PPP before the pandemic.
I wonder if they're going to have a rental program or something coming up.
That's a good question. Maybe it's the last article we're going to talk about today.
Maybe. We'll see if the producers throw it in. Hey, you ready for the next one?
Yep.
All right. Fannie Mae, Freddie Mac. First of all, great bands. Mortgages in forbearance do not need to be paid back all at once. So this article is from Housing Wire, and it's essentially a clarification because everyone, it says that you don't have to pay for up to 180 days, but then there's kind of no guidelines after that. But borrowers in forbearance will have to repay their missed mortgage payments one way or another. But there appears to be a growing number of borrowers who think they have to repay all their missed payments in one lump sum, either because they're confused about their options or because that's what their mortgage servicers told them. But that's not.
Can we just also point out that that's also what a lot of real estate agents have said on Facebook? Just saying.
And we've been saying for what, Ray? 3 weeks? Stop saying that.
We've been saying stop talking because there's like 4 or 5 ways it gets out. So they may have to pay it all at once at the end, but could also be refinanced back into the loan. Anyway,
here's the other overarching thing, which is you're not a lender. Even if it was that, say, hey, contact my lender today and we'll hammer this out for you. But yeah, so that's fun stuff. Fannie Mae and Freddie Mac. I'm trying to be cool today because I'm kind of on fire about a lot of things, and I'm trying to be like cool today. Fannie Mae and Freddie Mac each issued a statement Monday reiterating that borrowers are not required to pay their missed payments all at once when their forbearance period ends unless they choose to. This is a quote from the Freddie Mac CEO, David Brickman. He's a great bass player, by the way. Our policies offer a number of options to bring borrowers current, including repayment plans, resuming normal payments, or lowering your monthly payment through a modification. He goes on to say, we encourage homeowners facing hardship to work with their servicer to identify the plan that's appropriate for their unique situation. So you do have options. In case your local real estate agent has told you don't, you do have options.
Yay.
We here at the Bearded Manor Real Estate Show are here to break through those posts.
That's right. Chris Murray with a good word use. Zillow is anthropic. Very good. Bryant Williams said you should check out they should check out with their lender. Some lenders are requiring it, some don't.
Yeah.
There you go. Also that's what a responsible agent should post.
Hold on. Let me just take a sip of the tea real quick.
But at the same time, and I know why agents were doing that, because they were originally people were like, oh, I'm going to do forbearance so I don't have to pay my mortgage. And it's like forgiven. I think the point of most agents saying, oh, no, you have to pay it back, and you may have to pay it back right at the end. They were trying to say that as a like public service announcement. This is not free money. You will have to pay this money back.
Yeah.
But I think as the pendulum swings, it's swaying way over the other way. Swing. Is it swung? Swing.
Swing.
Either way.
Swing did, I think.
Swing. It swing did. It did.
So it may have come from good intentions.
Right.
But they were ill-informed.
Right. All right. So let's talk about home builders. Home builders, you are my only hope.
Squatting down. Back up real quick. Put me back up real quick. Ready?
Okay. Yeah.
This is, hold on. This is R2D2. Home builders, you're my only hope. Sorry. All right. Take me away.
All right. So people are fleeing the city faster than Brad Pitt in World War Z. As a wave of renters are fleeing their crowded apartments.
Look at the camera. Was so good.
Sorry.
For you guys just listening, you missed a golden moment. After his little joke, his eyes went up and then back down.
Okay, so as a wave of renters are fleeing their crowded apartments for more suburban single-family units with more space, the demand for new construction has tilted towards young couples who, with two incomes, who feel secure in their employment and are currently renting. So this is a quote from the article. It says, just last week, we've experienced an increase in sales as well as continued website engagement and activity, which there's been a lot of reports about website activity increasing. I think the last report I saw was 35% higher, which we mentioned last week.
Yeah, and we covered it last week or the week before about rural areas getting more interest right now.
Right. So this quote is from Stephen Paul, an executive vice president at Mid-Atlantic Builders, which is a small company with communities in Maryland, North Virginia. They go on to say online traffic to purchase a home has increased recently. While buyers still prefer to walk the home, builders might be the first to recover, as new construction is viewed as safe, clean, new, and easy to show. In many areas, new construction makes up twice of the supply over existing homes, and that was an already low supply before the pandemic. So you have a situation in which you have super low supply. You have builders with brand new, pristine, what is appearing to most people to be very clean and COVID-free homes.
Yeah, COVID-free.
Not to mention all the workers and everyone that was through there to build the home, but right. Still.
But they're still
they
essential.
Look at it. That's right. Sure, essential. Which they look at like are very are better than an existing home.
Yeah, and
but they are easier to show for sure, because you don't, if especially in a shelter-in-place situation, ain't nobody in it.
Okay, but now a vacant resale home is the same thing, and I'm curious to know what procedures are new construction companies using to keep their homes clean, and are they doing like the final walkthrough is a little different on new homes?
Yeah.
Are they doing like a final walkthrough / cleansing? A
COVID spray?
Yeah.
Airlines
stage, get rid of all the demons.
Airlines have the substance that they've been spraying around. Maybe home builders should have this COVID raid.
Insider note, that spray they're spraying around is the same spray they spray into bowling shoes.
Really? Is it? That's funny.
I don't know.
Oh, Ryan Gross
said,
calm. David said, hi, yeah, it's gonna. So it's a no-brainer for new buyers, which I might say, I think David has a dog in that hunt, right? Doesn't he do a lot of new construction?
Yes.
Yep. So, yeah.
No steering.
What is the inventory like, existing homes versus new construction in California? Are there more new construction properties available in Cali versus existing?
No, I haven't searched that recently. I'm trying to see new, where the new listings are popping up, and those are down. There's less of those in our current city. So I'd love to hear from David on that one.
David says he does it all.
Yeah. I don't do a lot of new construction. Obviously, when my clients want to see new construction or purchase new construction, I show them, but My focus usually on resale. They're still there. We have a lot of big builders, and we have a bunch of areas that were the farmlands, and now they're just being built up like crazy. But they're all kind of slowing down a little bit.
Pending developments are slowing. Home price gains slow.
Yeah.
Melissa said, Melissa Marr said, I've been back to the same new construction house 3 times with the same buyer recently. They love it, just won't pull the trigger. Well, what's also interesting, I'm not sure what your market was like previously, but were home sitting on the market long enough for you to go visit them 3 times previously? Because a lot of the bigger cities, it was not. David says luxury auctions are going to blow up.
Very poignant comment.
The luxury supply in our area was already high. So this should further increase it.
But he's saying auctions.
Mm-hmm.
All right, ready? Homeownership in the U.S. reached a nearly 8-year high BC before coronavirus. The homeownership rate, that laugh was weird. I do apologize. The homeownership rate in the U.S. continued rising in the first quarter, reaching the highest level since the third quarter of 2013, before the coronavirus shut down much of the country. The share of people in the U.S. who own their home rose to 65.3% over the first quarter of 2019. The first quarter of 2020, and then they were comparing it to the first quarter of 2019. The Census Bureau said on Tuesday. The increase continued a positive overall trend in homeownership that stretches back to the third quarter of 2016. That growth could be undone by the impact of COVID-19. Don't know if you guys have heard about that. On the country's economy, said Mortgage Bankers Association Chief Economist Mike Frattantoni. That's Frattantoni, not Frat and Tony. That's Frattantoni. The nation began shutting down in the second half of March, leading to tens of millions of job losses and millions of people needing forbearance on their mortgages. This is a quote from the man himself. Data for the first quarter of 2020 continues to reflect the extremely strong housing market prior to the current COVID-19 pandemic and subsequent economic crisis, Frattantoni said. Without a doubt, the rapid deterioration of the job market this spring will cause second quarter numbers to reverse course. So it's going to be interesting to see where they go from here. If you want more, there's a couple articles that we pulled for this one, but it does go into comparisons, and we stayed away from all that, how much it's up year over year and all that. If you want that, this was on Housing Wire.
Yeah, I use the other one, the ionhousing.org is the one that has charts that I'm showing you guys. Well,
yes.
So it's really interesting charts. But anyway, that's the Ion Housing.
Look at that crazy peak. Can you bring it back up again? That crazy peak in what, 2005? Look at that.
2004 and 5.
It's 70% of people owned a home.
Look how low it got in 2016, 15, 16.
Wow.
Very interesting.
It's like, wait, hold on. It's like the mountain ranges right up here north of me.
There you go. Melissa Marr said, new construction. Yes, they've been around longer for us to go back to a few times. Resale is what hot. Interesting. I guess probably because new construction is more on the outskirts maybe, and resale is more closer to the city. I don't know. That's really interesting. The resale is hotter than new construction there.
By the way, in case you guys were wondering, because I already knew the definition, but the definition of anthropic means or is relating to human beings or the period of their existence on Earth. I already knew that. That's in case you guys didn't know that.
The word of the day is anthropic. I feel like isn't that show called Password?
Yeah, where the password is
anthropic.
And welcome.
All right, so
we're now ASMR hosts. Welcome to the Bearded Men of Real Estate.
Yeah. Is that like NPR?
No, it's ASMR where they talk very softly but crisply into the microphone.
Oh,
and then they do things like,
I like that.
And then I
feel like that's also the National Public Radio.
All right, we've gone off track, Ray.
Okay, sorry. Well, wholesale lending is no longer hanging with Mr. Cooper.
He did look again.
All right. So Mr. Cooper is shuttering their wholesale lending program, which Mr. Cooper acquired by Pacific Union Financial last year. It was just a small part of the company's lending, and they are shifting their focus to larger channels. Quote, after careful consideration, Mr. Cooper has made the decision to cease its wholesale lending operations, a segment of the business we entered as part of the Pacific Union Financial acquisition. The company said in a statement made to Housing Wire. This is the interesting part for me. They said the pandemic was not the driving force behind the decision. They're currently the third largest servicer, handling over 6% of the mortgage market. And they said most of the wholesale lending channels that we're using, wholesale lending employees, will be shifted to a direct consumer channel. Direct to consumer channel. There you go.
So it's a shift for them.
It's just a shift. And it sounds like it was something that was planned whenever they took it over. So there have been some commentators that said, Mr. Cooper backing out of the wholesale program. Well, they just took that over not too long ago. Right. And this sounds like it was a planned shift. Anyway. Yeah.
It's a switch. We're calling it a switch here on the Bearded Men Real Estate Show.
Switch. Pivot. David said, all it will take is one story of a new home buyer catching the virus in their new home to ruin the resale market. Or the new construction market. Same thing could happen. They could say, oh, we bought this house because we thought it was clean and crisp, and now we're suing the builder because he did not obey the CDC recommendations, and his contractors were in there with the virus. Now we have the corona.
And not wearing masks and all that stuff.
I can totally see that happen. There's actually someone to sue in that case, whereas there's no one really to sue. And if a seller sells a home that, they're trying to sell it and people are coming through it.
Yeah, especially if we're filling out all the forms that we need to do and doing our distancing while showing and doing final walkthroughs, which is what we're all doing, right? Good.
Melissa Marr says it comes down to the price point. People don't mind having to do some updates if it means they're paying less by me.
Yeah, and I've covered it a lot here on the Bearded Men Real Estate Show program. It's a show program.
Program show.
It's tough with new construction here because of the Melrose, the extra special assessment taxes that go on top of it. So it's.
Are you talking about the Melrose?
Yeah, the Melrose, the special assessment taxes that go on top of your base property taxes. It gets a little difficult, and then an HOA and all that. So it's not as prevalent new construction here. What do we got next? So continuing with we covered, what was that?
Forbearance, right?
Yeah, we covered, we clarified that you're not necessarily going to have to pay it all back in one lump sum, but now nearly 10% of FHA and VA borrowers are in forbearance. Now, this is also from Housing Wire. Thanks to the continued impact of the thing we keep talking about on the economy, approximately 10% of borrowers whose mortgages are backed by the Federal Housing Administration or the Department of Veteran Affairs are in forbearance. The data comes courtesy of a new report from the Mortgage Bankers Association, which polled more than 50 mortgage servicers that collect payments on nearly 77% of the mortgage market. I don't know why I all of a sudden have an accent. According to those servicers, nearly 7% of the 38.3 million loans they service were in forbearance as of April 19th, 2020. But the largest segment of borrowers in forbearance have mortgages backed by the FHA or VA. According to the report, 9.73% of the loans in Ginnie Mae's portfolio are in forbearance. According to the MBA report, MBA, not NBA. I don't know why we'd be doing a report about the NBA right now. Oh, wait, we did. The share of Fannie Mae and Freddie Mac loans in forbearance also increased, rising from 4.6% to 5.4%. The share of other loans, those included in private label securities or held in portfolio, in forbearance rose to 7.52%. Again, if you want more on that and more stats and facts, go to Housing Wire.
Interesting. While you were doing that, I was messing with some of the. There it goes. There it goes. Here it comes. There you are. Oh wait, it went away.
Yeah, Beard News Network.
That would have been such a good name for a show.
That's
all right.
Mike Elizabeth Roselle's comment. That's good.
Oh, wait. Oh, so whenever I mess with the banners, it covers up the comments. Sorry about that. All right. She says, nah, that's too hot coffee lawsuit. And two TOOs if you're an audio listener.
Yeah.
She said, I think anyone hearing about the lawsuit about catching COVID from new construction is going to dismiss it.
Interesting.
Hey, would they also dismiss somebody getting COVID from an existing home, or would they just add to the end of the contract? You know, like sometimes when the home is exceptionally nasty, we add a home must be professional cleaned prior to close.
Yeah.
You could also say home must be professionally cleaned and sanitized prior to close.
Yeah, I think it's a smart move right now.
Tamara. Oh, the scroller's back. Yeah.
Hey.
There you go.
Hey, do you want to skip your next one? Because that's essentially the
we can,
right?
Yep. We can move to yours and then we'll cover mine at the end.
Okay, so Zillow makes renting a one-stop transaction with new technology. I want to know if you guys have any opinions on this. I want to know why you think they're doing this. I'm really curious. Is it because their business has been hit or they're trying to help? It's very interesting. So, and they're actually trying to do a good thing. You'll see in 1 second. Zillow has launched a new technology tool to help smooth the renting process during that thing we keep talking about. Now, renters can search, find, apply, and lease a home entirely via Zillow Rentals for a flat fee. And I don't know what that is. I tried to find it, but I don't know what that flat fee is. For a flat fee, renters can submit an application through Zillow and use it with any properties participating within 30 days. This also includes a credit report and background check, and renters can explain the reasons behind any negative items on rental and credit history. Landlords can upload an existing lease form and send it to the tenant to sign electronically, creating a one-stop rental transaction. These tools are free for landlords, so that's kind of cool, right? They're free for landlords and property managers who use Zillow Rental Manager. That's what it's technically called. As a quote, Zillow is reimagining real estate to make it easier than ever for people to move from one home to the next, whether they're buying, selling, financing, or renting, said Douglas Pope. He's not the Pope, he's a Pope. Zillow's vice president of rentals products team. He goes on to say that mission has never been more important, and it's the reason we're providing these free tools to landlords and property managers to help renters who still need to move but can't complete the transaction in person. So I have a question, Ray.
Yes.
Why is it free to the landlords and not the people that might be suffering right now and have to move?
So they have to pay for the service? I figured that would be free.
Yeah. Someone has to pay for it. I get it.
Well, I don't know. Okay, it says, this is what I found interesting in the article. 7% of renters said they wish more listings offer virtual tours. With the price of virtual tours currently, it's going to be very difficult for most landlords to offer virtual tours on them because it's a high percentage of the income.
Right.
Ellis Home Inspector says Zillow is wanting to get into all areas of real estate.
Yeah.
Marquita Bryant says they're trying to help. They're going to launch something else soon. I don't trust them.
Ooh.
Looks like they aren't trying to help. She said they're going to launch something else soon. I don't trust them. Looks like they want to go into property management. So, I mean, that's kind of their MO, though. All these things make it look like they're interested. I'm curious. There's a Zillow 3D Home app, Zillow Rental Manager. I don't know who pays for it. It seems like they're probably offering it free for now. Or maybe it's free and then they take a percent somewhere else. Or maybe are they taking applications? There's usually an application fee that is a hidden stream of income for property managers. So if they're taking applications, then they're getting the application fees.
Yeah, it costs them $25 to do the rental application fee and run their credit, but they charge $50.
The gold is the data the renters provide. Interesting.
Tim, you need to shut your pretty mouth. Don't talk about that stuff.
Tim Macy said, I heard Zillow was negotiating a purchase of Be More. Zillow would know. From what I heard, Zillow purchased the Tim Macy show and then shut it down, apparently, because I haven't seen it in years.
So that's what happened to it. Okay.
That's what happened to it. Tom Tizak said, back to forbearance Maui. I just heard from one of my loan officers that utilizing forbearance will negatively impact the ability of loan approval, although it is not supposed to affect credit. Credit is not the only thing lenders look at in loan approval process, and they're not likely to be kind to consumers that took advantage of forbearance. Clients should be aware if they're planning on buying or refining in the future. That's interesting. So they're not, it may not impact your credit, but it may impact your worthiness to obtain a loan.
So they're saying, no, forbearance is fine. It's fine. You can pay it back. But then on the end, they're going to go, well,
if you need another loan from us, you're going to have to pay a higher rate. Because remember when you hung us out to dry?
Yeah, you're now a bigger risk.
Tim Macy laughed at getting his show down. Unless there's a Ray bringing the shade a little today.
It's always Zillow's fault. So that's a very interesting prediction there, Tom. Thank you for that. That's awesome.
If somebody does want to sponsor the shade on the show, I need blinds for our remodels. So there's potential money-making opportunity for you there.
We potentially have 3 sponsors at any given time. They just don't pull the trigger.
There you go. Yeah, Tom Tizek says so. That's correct. There's still a little bit of delay. We're using StreamYard currently, as you can see from the logo on the top of the screen, but there's still a little bit of delay. We see the comment and then say something, comment you post. So sorry about that.
Yeah. And I believe it's in the 11 to 15 second delay is what I've counted.
Really?
Mm-hmm.
That's
pretty big.
A little worse than what's that? What were we on? Be Live?
Yeah, but Be Live wouldn't even let us go live. So
I got all my money back from that. All the way. For those of you that have invested in our show and have provided money for us for t-shirts and stuff, you should know that we got our money back on Be Live.
And you get to wear our faces on your boobs.
There you go. For whatever reason, my Forbes link is not loading. It's loading some other page on Forbes. It says 404, so maybe it's gone. But I'm going to give a rundown of the article, and then this is really what we want you guys to comment on. Let us know. Paige, I'm going to go back up to Paige's comment at the first of the show, and we'll get into some details. Here's a quote or a comment. David said, "I wonder what the percent of that went to forbearance had their house on the market." That's an interesting question. Let's see. It's not that bad. Melissa said, "Good. They were awful. That was awful." All right. So, we're going to deep dive right after this, talking about home prices and what they're going to do in the future. This article in particular is from the UK, because as Dan was looking at analytics, we realized that we do have a pretty wide worldwide following, including the UK, Australia, people all around the world.
Yeah.
But this also, they're kind of ahead of us. They were dealing with the virus before us. And it's run through, you could say it's run through them faster. In some areas of the UK, it's created more issues. So this is an interesting one. This news for UK Be More contributors. HomeTrack and Zoopla, which is like Zillow in the States, released data last week that suggests that the pause button has been pushed on 373,000 property transactions, with an estimated value of 82 billion pounds, which that's like 10 trillion US, maybe, approximately. I don't really have the numbers in front of me. The fear is that this could lead to a seismic fall in house prices in the UK over the next several months, as demand dropped 70% in March and bottomed out at the start of April. So, will it last? The bright spot is that demand seemingly increased over the last few weeks. It's likely that buyers have learned to live with COVID-19 pandemic and are finding workarounds to accomplish the moves that they still have to make. For more on the UK market and details and opinions from Gary Barker, he's the guy that wrote this article. He's a senior contributor at Forbes. Check out the section of Forbes. That's where this article, which right now is returning a 404. It says, will home prices decrease as a result of COVID-19? And that's what we want to get into with deep dive. So are you ready to transition?
Yeah.
And we are now officially in the deep dive.
In case you guys didn't know. By the way, I did. Hold on. I'm going to go to my post so I can read through comments with you. You can't just display them, but I will have them on my phone. But
Paige
I did do a
go
quick
ahead.
test ray of the delay, and when I waved for no reason and I was watching the feed live, it's about 20 seconds. It was a pretty good delay.
Paige Lewin says Sacramento prices have been dropping slightly. Also, inventory is down, but buyers are here and have lots of people looking to see what their properties are worth. I think they're going to have a surge in homes on the market.
And by the way, these takes are great. So if you guys commented on my post or on Ray's post, copy that and send it over here on the actual live feed, and we can display your comment. If not, I'll be showing them here and Ray can show his.
I could see if I could put them on some of these on the iPad and put them up.
Yeah, and we have
some of yours, and I'll see what I can put up.
We have such differing, because remember, we're not all in the same market. We're around the world, so it's really interesting to get these different points of view. And I believe that through watching the Bearded Men of Real Estate show, you learn about other markets, which helps you get better at your own business in your local market. Because you can say, well, and I don't mean to do a plug for the show. I just mean you can say, actually, I have a friend in, so this is ABT, Aaron Bennick Thomas. So this is his current market since March 18th. No way to predict, only to react, as we have no clue what types of companies will go out of business, which ones get stimuluses to survive, et cetera. And he says literally anything can happen. So I don't know. I can bring it up. There we go. That's their market. He is in Cincinnati.
Mm-hmm.
So that is his market. And
I thought there was a commenter right after that had a good point.
Yeah. So I'll go through, because I want to go through.
No, somebody replied directly to him. I think it was. Can you bring that up? What was that? Reply?
Yeah. Well, who's Ray? That's weird. Huh? Ray Allen. He said, there's a way to predict. All right. Watch the show and watch us predict. There it is right there. Hi.
There it is. Strong.
Yeah. And then he meant accurately predict. Yeah. And then Heather Haas, they're creating more of a demand in her market. And those two are both in Ohio. Less listings, higher prices is what she's seeing.
Interesting. So
this is my buddy who is in North Carolina, I believe. I am seeing a lot of local listings drops nearly 20K in the last 2 months. I compare my property, so I look weekly. Then again, I think he's in North Carolina. And then this one is interesting. So Jay Marks, who we love, he's in Texas. He said, real estate is local. And then Ray said, so what's going to happen in your area? And then KC, who is also in Texas, his clients are losing out left and right on multiple offer scenarios. Wow.
That's interesting.
And then Jay commented in Dallas-Fort Worth in the last 24 hours. So it's got the new listings back on market, price decrease, which is almost as much as new listings. And then it's got price increase, active kick out, and then active option contract, pending and sold. So you can see, and that's Dallas-Fort Worth area there. Focus on that, not my face.
That's interesting.
Yeah. So you got some up, Ray? You want to cover through some?
Yeah, Cooper, he's a lender. He says, I think prices will go up because of the pent-up demand. Denise Wilson said, my thought is everyone's going to finally list and we'll have buyers in the market, though there is such a shortage right now. Brad Cox, he's an agent. He says, I don't think we can make generalizations nationally because of the local markets will vary from our area. For instance, prices are holding steady because we were in and still are in a very strong seller's market. But that area has been overpriced and seen much greater gains for the past few years. There could be certainty. There could be certainly be negative pricing pressure. I think it also depends on how long this drags out, how quickly we're able to get back to reasonable levels of employment again.
Yeah.
So the longer we are shut down, the greater the impact will likely be. Steve Fisher, he's a lender that does increase. Philip says, I think they will say the same. Depends on how many hit the market. We're currently looking. Houses are snatched up so fast. Katie said, no, I'm an agent. I think demand will increase. Zach, he just sold 4 spec builds. Right now, prices look good. History tells us that real estate tends to lag behind the stock market. Hoping for the best, though. He's a builder.
Who's this Tim Macy guy? Why does he keep commenting?
Tim Macy is like everywhere, like a virus.
Hashtag
He said, I
white
think
guy.
it's very market specific, just like a virus. I think there will be markets that are hard hit, see fairly substantial drop in prices, but I think other markets will win. More specifically, I think this will speed up movements that were already happening. Places in California that were losing people will see an acceleration. Areas like mine are gaining people. That's interesting. Colin,
So,
JJ, Cameron said,
going along with Tim's comment, sorry about
prices
that.
will hold. Oh, so, let me get Colin's out there. He says prices will hold. The market will be much more even, but with a slight edge for sellers. Melissa, Elizabeth, Michael Elizabeth Rodell says increase. Interesting.
But to go along with what Tim was saying, it's interesting. So it made me kind of think about here in California, where we have a lot of tech jobs. People were already working. Well, even if they weren't working from home, they can work from home, and now they are. So they're still, their jobs remain. So things aren't going to change for them. They're going to still be looking for homes and purchasing homes. Just how they view those homes and how they purchase their homes is going to change. So he makes a very poignant. I've used poignant twice on the show now. I should move on.
Point. Robert Sampson comments on the live show, so I could display it. So we've been seeing multiple offer situations in DC, Maryland, and VA region, Virginia. Yeah. We have limited inventory and prices have remained consistent from pre-COVID. Tom Tezak in Maui says virtually no business in Maui.
I know. And
so that is one of the things that we're in some of the articles that we were looking at leading up to this week. They were talking about the vacation areas and how hard those areas have been hit, and the hospitality regions and the hospitality industry and how hard that's been hit, and where that could be an opportunity for buyers coming out of this, that some of those places are going to have lower home prices than is actually necessary, because once everything recovers, those home prices are going to go right back up.
Well, yeah. And I mean, we had it happen in the contributors messenger, where Eric had an offer on, it was his listing, right? I think it was.
Mm-hmm.
And a buyer came in. They didn't have any offers yet, and a buyer came in $100,000 low, and then came back, and they came back $10,000 low. But at that point, they already had multiple offers, and the buyer missed out. Like, the agent should know better than that. That just feels a little slimy to me. This isn't the time to try to take advantage of a seller. You still need to run your comps. You still need to see what the home is actually worth and what it'll appraise for, and then maybe you negotiate a little lower price. But to come in $100,000 low, that feels like they were trying to take advantage of that seller.
Yeah, I think we talked about that when Marley was on the show. Was that 2 weeks ago? And how people were lowballing and saying, due to the uncertainty in the market, we were kind of hitting on some of that, where buyers, investors were trying to take advantage of it, and they just weren't getting anywhere with it. Robert said the DC region is a little more insulated since we have military government sector jobs along with other essential business ops. Tom T says a short window of big opportunity in the resort district. Let me say that again slowly. I think there's a short window of big opportunity in the resort district. So there you go.
So
send your referrals for second homes to Tom Tezak.
So when that short window happens, there'll be a big opportunity, but it's a short window. So back to mine. So David, did we ask is it Fresquez? I think it is, right? Are we saying his last name right? I forgot if we asked or not, but he says at least a 3, and he is in the San Diego area, at least a 3 to 8% correction, meaning a drop, with bigger significant dips in larger MSAs with new administration. Limited supply. This is Lisa Willie Simmons. Limited supply, and if a house shows well, prices should be good. So do you know how to say her name? after Lisa's comment, Ray?
Boots Bonner.
Yeah, and I don't, but I think I do. I think I don't know if it's Eichling or Ashling. I think it's Ashling.
Probably Ashling.
I think it's got the
Aisling?
SH in there. So if you're watching, you can correct me, but I believe I'm saying that close, if not dead on. So what I see happening is a lot of
Sounds
people
like
are holding.
I'm saying that I'm probably close to that, if not exactly correct.
I've heard her say it before. I just can't recall it. But there you go. He's got it up. So what I see happening is a lot of people are holding off until this is over. To me, that shows there will be a flood of listings once everything settles down. I also believe the people that have pushed off their payments on things will also have an effect on the economy. The interest rates will be lower, so that will entice the buyers that may have been on the fence. So all in all, I'm not sure. So I kind of mirror that. So it's definitely going to be tough for sure. That's kind of what I say. And then she goes on to say sales and foreclosures are going to make a comeback either way. With people overbuying and not being able to sell in 3 to 5 years, it will take its toll. Plus, there's a black market of homes, also called shadow inventory, that are not foreclosed on because it would devastate the market. So they do it in groups.
Mm-hmm.
Yeah, you want to go through Howard's, and then I think Brian's is a very interesting comment.
Yeah. So Howard is in Israel. He said, "Well, market specific question. I expect immediate drop in price due to pressure by sellers to sell and an increase in fresh homes on the market. But in the medium time frame, prices will increase due to availability limitations and expected increase in immigration to Israel. More buyers than available product."
Yeah, and they're fully shut down there. So yeah, Brian's is interesting.
Good. Oh, I thought you were going to read it. You want me to read it? All right.
Yeah, go ahead.
Okay. He says millions of Americans will, with businesses shuttered or not working, who can't pay their bills, buyers won't be able to qualify for a loan. Defaults are on the rise, and those with forbearances probably won't be able to catch up with forbearances all over. The market will be flooded with sellers trying to sell to avoid foreclosure. This will drive home values way down, probably 15-40% in some areas. I love his predictions. Not looking good for buyers agents. Great time to be seller's agent though. No matter how bad it gets, there will always be plenty of cash money of those who are waiting on this opportunity to buy it on the cheap.
So
Tango and Lou agree.
I had a question
a little bit. Let's dissect it a little bit.
Yeah, because you and I agreed on it, and if there's a flood of homes to the market, and this is where we started the show, so I haven't seen these comments yet. But if there's a flood of homes to the market, and it affects affordability, which has been an issue for years now, wouldn't that help buyers agents?
Well, the backside of that is he's saying, well, people can't get a loan because of the $700 or 700 required credit score, 20% down payment, et cetera. Personally, I think you're just going to have more lenders that are more flexible. Like a lot of my local lenders are still at the 640, 660, 680 credit scores, right?
Yeah.
So because of that, they're still giving loans and they're taking people that the big banks won't take, and they're taking them in droves right now and making a lot of money. So I think you're going to have opportunity for the smaller guy. I don't think that it's going to be necessarily a stop where they just can't get money. I mean, that's what we saw with subprime, is that people couldn't get money and there were homes available for sale.
But that's not the case here.
That's not the case. And there's more equity in the homes than ever before. We were just coming off of I think it was $2 trillion in equity among the homes that were currently owned.
Yeah, 2 or 3. It was a lot of equity.
Yeah. So if there is a dip in home prices, let's just pretend he's right, and due to all the inventory hitting the market, there's a dip in home prices. I think you will see buyers come out of the woodwork that have been waiting for a long time to purchase, but did not because the affordability, or they're totally sure where they're working. And if they still have a job like this and they could get a loan, they're a solid buyer.
Well, and then Ray, if they've been waiting this long, what have they done? They've saved money and they've improved their credit score.
Yep. I think it'll be tough to be the seller's agent. Yeah, you may have a listing, but now you have to tell those people, actually, what we thought your home would sell for, we were off by 15 to 40%.
Right.
That's a tough place to be as a seller's agent. And then David, he echoes me. He said he had up until not being a buyer's agent. It's the opposite. He said this will be the year of the buyer's agent.
Well, especially with Redfin and Zillow and all these iBuyer programs going away and virtual agents going away, actual in-person buyer's agents are going to be in demand, I think.
Or what was it called? Tech-enabled buyer's agents.
Yeah.
Melanie, hey, she said that if anything, the price increase in score requirements are going to slow it down.
Yeah.
So you think? Oh, she said if anything, not the price increase. Let me requote. She said if anything, the increase in credit score requirements will slow it down.
Right. So to mirror that,
but that's not across the board. That is just at some lenders.
Well, and remember, it's a reactionary thing to what's going on right now. So once things loosen up and people become more comfortable, it's going to loosen back up. They're going to want to restart the home buying process. They're going to restate or reinstate their lower credit requirements, I believe.
Mm-hmm. Melissa Marr said the lending issues, I believe, are only temporary, which is kind of echoing what you're saying. She said once things start reopening, banks will get more comfortable and loosen up again. The raising credit score limits are only temporary. Redfin, wait, let me put that one up there. She said Redfin is turning into a virtual brokerage. You heard it here first. Nice. Breaking news from David on Be More. Be More, the BNN Bearded News Network. Melissa Mara says yes, and she agrees with it. Okay, so if you follow my pages, you have seen a quarterly update. If you're on Instagram, I'm at Ray Zorback, RayZorback, which you can see on the screen below here, right here. So if you follow my Insta, then you should have seen the housing market update that we just posted. If not, go watch that. At the back end of that, we talk about the factors that may affect this. Of course, everyone is looking at unemployment, right? If those jobs come back quickly, there's still going to be some that don't come back because I think there was an opportunity for a lot of employers to get rid of the people they didn't want. So I think there's going to be some jobs that don't come back. Companies have learned to operate more efficiently. I think that leads to more opportunity in the future for those companies to grow quickly and to make more money, which is going to be better for the economy in the long run. So some jobs aren't going to come back, but most of those jobs are coming back. Then when those jobs come back, I think you're going to see that's when the lenders turn around, because that means that people are paying their mortgages, they're paying their rent. So the landlords are then paying their mortgages, and it's a more secure situation. And that's what the banks always look at to know if they should open up lending or if they shouldn't, is how secure the borrower is. That's why they do the pre-approvals. That's why they go through and get the credit score, the debt to income ratios, and the history of payment, right? So they get all that information because their question is, how secure is this buyer? Well, the banks have thrown into a situation where they have no idea how secure the buyer is. So I think they may be looking at things in the future, how much cash is on hand, to be more comfortable with giving additional loans. But when somebody has a job and they have a contract for a job, I think they're still probably going to open up lending. And I agree with Dan and Melissa. I think it's going to be temporary. Big question is, if those jobs don't come back quickly, if the lenders don't reduce those requirements and restraints quickly, we'll have more inventory hitting the market, which is going to create a lot of affordability for buyers that couldn't buy a while back. The big question is, can they buy now? And I think those buyers that have waited, this is their big payoff, and I think they're going to jump in the market.
Yeah.
I don't know if they're going to jump in the market at the same rate as the supply increases, because if they do, then home price gains will stabilize. If they don't, then home price gains will drop. And I don't see a reduction in home price, though. I think you may have gains levelized or gains that stop, but I don't necessarily see a loss in home values.
Right.
That's my prediction.
And, you know, going back to, like, think about those buyers that were already waiting for affordability to dip, or I guess to increase affordability. And now this happened. They're like, you know, then they didn't lose their job. They're just sitting there waiting. And now they're like, well, this is my thing. So they're either trying right now or they're going to wait until this cools over, and then they're going to jump into the market.
If you remember that article that I talked about, people fleeing apartments as fast as Brad Pitt in World War Z, if you think about that article, one of the things they talked about, or maybe it was the Builder's New Hope one, I can't remember, maybe it's the same one. One of the things that these articles talked about was the avatar, I'm going to call it, the buyer who is out there currently, have a secure job and stable. They're still working. They're a young couple and they're currently a renter. There is an avatar for you as an agent to go out and find, because those are buyers that are currently looking. I think they were talking about in the context of buyers' habits changing, and they were talking about in the context of a buyer going into new construction. But I think those are probably the most likely buyer that we'll see in the next couple of months.
Yeah.
I think a lot of the older buyers in the community may wait a little longer because they are more at risk. They have a more secure situation where they currently are and want to risk it. But if they're a renter, you got nothing to lose. You can find a great deal on property for less than you were paying, now a lot less than you were paying in rent. And so if you still have the job and you're a family looking to grow, I mean, why not buy? You would be crazy not to buy right now.
I mean, I think so. Yeah. If you're in that vein.
David said the only way to buy for most is if they do something with credit reports and underwriting. Do something. Only way to buy for most if they do something with credit reports. Do something in response to the forbearance or losing their job and then being employed again.
Does he mean? Yeah.
Don't tell hair buns are the ideal. What?
I don't know. That might have been some shade towards millennials. I don't know.
Top knots? Are you talking about top knots?
I think it means, cut the top knots.
It's not a hair bun. It's a top knot.
Do you want to go back to some of the comments on this, on mine?
Yeah. Let me bring it up.
Lou Tutko, who's in Florida. Impossible for me to believe they will go up, except a short-lived blip for pent-up demand. After that, I think you'll see them fall. And after these, I want to go back to the 15 to 40% dip that David mentioned. Wait, no, who was it? Pagnani.
That was the
Brian. Sorry,
Brian.
So, because I mean, a correction is 10%. So, Ray, do you recall in the slaughter that was the 2007, 2008 market, what was the correction then? Was it more than 40%?
Oh golly, I don't remember how much home prices decreased. I mean,
I'm just saying, like,
across
that
the
much
nation,
we'd have to compare the two.
I'll look it up while you're going through some of the comments.
So Kango, my best friend in the world, other than Ray, we still have a major inventory problem in Arizona. However, the ripple effect will linger. I think the mortgage industry will have a reactive approach to the slump in applications and pre-qualifications due to job loss and mortgage lates. Cash buyers that felt their portfolios shrivel got a little gun shy, but I think they'll be back soon to take advantage of the stagnant inventory that used to be priced on the wrong side of the sink or swim line. Very interesting comment. Very good. This is Esther Jacobson. I don't know where she is physically. I think prices will get lower as the business and jobs get back up. By then, people will be trying to catch up, paying past bills to catch up with past bills. It'll take a while. I'm sure the result will be foreclosures. So she's predicting kind of some foreclosure issues. Paige, who's already commented on the show, prices here in SAC are decreasing slightly. Inventories are down, but positivity is still strong in the market with buyers. Barbara Anderson, we were holding out hope maybe as we as it was to. So I see a lowering of price and becoming more of a buyer's market with more listings. Chrissy,
we were holding out as it was. So now that they're seeing a low price, they think it's going to be a buyer's market.
There you go. Sorry, I couldn't get through that one. In my area, this is Chrissy Topoleski. In my area, I don't anticipate prices dropping. The market is still moving now, and inventory is still low. There may be an uptick in the number of distressed sales, though, in 12 to 18 months. And she's an agent. Melissa's already commented on the show, and she mirrored that. I don't see prices dropping, except maybe a little in the higher end of the market. Dan Ludwig said, join the show. Jason, and I've never known how to say Jason's last name. Guyan. Is it Guyan?
I don't know.
But we have not seen the fallout of this yet. Yes, lots of people are out of work, and yes, lots of businesses are closed, but most of this is temporary or is being held up by loans. I expect the markets to surge once we reopen, but they will fall flat within 2 to 3 years when the bills that everyone put off come due. Ooh, that's interesting. Taxes and rates will have to go up to pay for the trillions in defect the federal government has, and each state will be its own war ground. Ooh. Like anything, the overall market will fluctuate, with areas that have stable jobs seeing growth and others seeing a downturn nearing collapse. I think he means in general, most people are moving out of apartments and condos, trying to move into single family, into rural areas, as we mentioned, or if need be, multi-family homes, all in an effort to get distance from each other out of fear of another pandemic or resurgence. So very good stuff. I have 3 more. Do you have any more? I can hit these last 3 real quick.
No, go ahead.
Heidi Fuchs, who is in Florida as well. No inventory, so prices will stay the same. Eric, who is, I've mentioned him, Vasquez, he's in New York. No, prices may not skyrocket, but they will not go down. We will see what I call the 9/11 effect. You guys may have heard of 9/11. It's a thing that happened on 9/11. This is where people want to leave more congested environments, which we just covered on the show. May not be the best for major metropolitan areas. I struggle with not saying things funny when I'm reading them live, by the way, if you can't tell. I wanted to say metropolitan because it's funny. May not be the best for major metropolitan areas, but good for all outlying areas. And then Terry Cornell Hughes, my region is small. Our market has not been affected as of yet. So interesting to get comments from around the country and around the globe, because we are worldwide.
David said, dude, I had my house appraised for $900K and had to short sell for $675 back in the day. Scars are still there. Yeah. So to answer your question, it was about 19.5% where the home price declines in 2008 crash.
So let's round it up to 20. And is that national or in Little Rock?
Yeah, it's national.
So let's round that up to 20%. And Brian was predicting 15 to, so on the short side of his prediction, the low end, it's almost going to be as bad as 08. Do we really think that?
I don't think so. And it's interesting to hear what consumers think. You know, we had a lot of realtors respond too, because we've got a lot of agent friends around the country and around the world. So that's cool. But it's really interesting to hear what some of the consumers think and feel about this, because I think that informs our opinion of how we need to educate the consumer moving forward. There have only been one other recession in which home prices declined, and they declined about, I think it was 6%, maybe 3%. I can't remember off the top of my head.
Right.
Every other recession, home prices increased. They just increased less. So they would increase 3% or 2% or 6%. But every other recession, home prices have still increased except for 2. So I think this is going to be one in which home prices continue to increase, potentially if more buyers enter the market. The only decrease I see would be the blip, which Lou and I are kind of opposite in this. He thinks there's a blip in which they would increase. I think there's a blip in which they would decrease, because you have a bunch of inventory flooding the market before the buyers and the lenders can get together to purchase it. So I think when that happens is a big opportunity to purchase, almost like what Tom Tizek was saying about the resort locations. There's a short window of opportunity there for buyers. And I think it may apply to other areas of the country too, just not as extreme as a place like Hawaii.
Yeah, I tend to agree with that. And it's also wishful thinking. I do want things to be more affordable here in Southern California. So, but I also don't want my sellers to lose money. But, again, if they bought 5, 6, 7 years ago and they've had all these gains and it dips back 6 to 8%, they're not really losing any money. It's just where the market's at right now. But I would hope that I kind of agree with that. It'll be a blip, opposite of what Lou's saying, and then go up. I also don't see it being this crazy surge. I don't see that or feel that it'll be this crazy frenzy, but who knows? I mean, once things are loosened up and people can get back there, if jobs are there, maybe we'll see a big frenzy. Yeah. I don't know. I don't feel that would happen, but maybe.
Yeah. And we've kind of already covered, there was one more article we were going to talk about. We've already covered it and everything we've been talking about, the different trends and what buyers are looking for. They're looking for a less dense population. They want less driving. They want more amenities. They want a better location, and a location that's probably outside a densely populated area.
Yeah.
So which that article covered too. We've totally already covered those trends. Shows it's that's neat how you can have an article and then like throughout our discussion we hit all of those points already. So I'm not even
Yeah,
gonna bring it up.
and by the way, Ray, that's only provided here on the Bearded Man Real Estate Show live on Facebook every Wednesday at 10 a.m. my time, 1 p.m. on the Cheese Toast.
There is no other good live real estate show.
There's not one. Nope, we're
I don't know if another one actually.
Well, no, you don't have to say that part.
Okay. Well, thank you guys for joining us on the show. And you can catch me. I'm Ray Zorback, RayZorback, all over the internet. Dan, where can people find you?
D-lettered rocks. It says right there under me, right over my face there on my shirt. By the way, go buy a shirt. DLUDWIGROCKS everywhere. Go follow me on TikTok. I'm Dan Revolution, but it's still, you can find me under D-lettered rocks, but I'm Dan Revolution. And I post a lot of, I don't post a ton there, but like, because all the videos that they're doing where they just mime what someone else is saying. Like, I just want to do dumb videos, and then it's a cool platform to do dumb short videos. And my one, did you see my rock, paper, scissors one?
No,
dude. I hate to toot my own horn, but it might be my best work ever.
Nice. I am going to get to one before we leave. Tom Tezek said, for those in cyclical markets, this is the reset that we've been waiting for in the past 11 years. And then Dan agrees that we are the best. He says, great show, guys. And Melissa Mars says, love you guys. Oh, we love you too.
And Tom's comments kind of, not to extend the show, but they kind of mirror what Michelle Calkins we had on the show. She's in kind of a resorty area up in Lake Arrowhead. So it kind of mirrors that. So good times. Thanks, guys.
Thanks for all the feedback, and thanks for sharing the show. If you haven't yet, just hit the share button. We appreciate it.
It's Ray's birthday. It's the least you can do for his birthday. Bye. I love you.
Subscribe to the channel. Bye. Subscribe, like, comment, share.
Comment down below.